Hey, what's up? Good morning, everyone. So, welcome back to another analysis here at Financial Hub. I hope you can hear me loud and clear. Yeah, I bet the sound is fine. Welcome back. For those who don't know me, I'm Caleb. I'm seeing new faces. I'm seeing a few new people. Some I've seen over here a couple of times. So, welcome back. Welcome back. So, what do we have today? Apologies about Monday. Monday, I don't know what happened with the Zoom session. It just refused to work. I don't know if it was a global Zoom problem or just on our side, because we tried with both the laptops, mine and Ken's. But today it seems fine. Luckily it does. So yeah, so welcome back. So what do we have this week on my analysis? Last week, remember I told you I had two trades which both went to losses. I remember talking about that on Friday. I had 1% risk on each. That was on Aussie dollar and USDCAD. We saw some dollar weakness coming in last week. It was quite crazy. So that's what happened. Took that loss, journalists reflected on it over the weekend. This week, I remember also on Friday when it was closing, I gave a new analysis that I was looking at, which was UK oil as well as US oil, which is playing out pretty well this week. Unfortunately, I have not yet, I didn't get an entry. I'll explain why when we get into the chart. I have a systematic way of entering the markets and coming out. I don't just jump on it because it's moving. I'll show you that on the chart when we go into it. And apart from that, I have other things on my watch list, such as gold and Dow Jones. No trade on those ones. This week I have no trade yet. So I'm still sitting on cash, waiting on opportunities. So in terms of, let me share my screen. If you have any questions, please ask in the chat room. I'll be sure to answer. With that said, I was saying, in terms of fundamentals, nothing much really. So let's look at the charts. So in terms of fundamentals, looking at Forex Factory, nothing much has been happening this week. Monday, Tuesday, Wednesday, nothing much. But Thursday and Friday, we have the Jackson Hole symposium, which is an important meeting. This is basically a bank meeting. It's normally organized by the Fed of Kansas, something like that, something of the sort in the US, which invites top key leaders to talk about one main topic that is affecting the markets or the economies as a whole. So this is an important because it has big boys talking. Okay, so day one and day two on Friday. On Friday we also have Federal Powell speaking, so that's also another important thing to have on your radar. And yeah, apart from that, nothing really important. And we'll end the week on Saturday with the Jackson Hole symposium. So this is an important 3-day meeting that you also need to put on your radar. So starting off, UK oil. Let's start with that. I remember I shared this analysis. If you remember well on Friday, I was talking about this. This was a simple, quick analysis looking at it. It was a long-term trending trade. So you can see this first touch, second touch over here. We came and got that third touch. Nothing complicated, just using trend lines and key levels, as well as a few patterns here and there. Then we came and look at this support. Okay, look at this beautiful support. Market has rejected it once, twice, and after rejecting it twice, I normally like paying attention to this levels where market rejects and goes and forms newer highs. It's really important to pay attention to that. So when market came to this level, went to new highs, market has corrected in the form of an ABC. So just simple ABC back to that level. Market got some support. I remember talking about this on Friday. Friday we had this bearish close. Yesterday, Monday, we had the 6%, about 6% price increase on this one, and yesterday we had another 3%. 3.4. So this week we've had about 6 plus 3, about 9% increase in this commodity. This move came in quite fast on Monday, so I didn't get no entry on this one. Yes, I was paying attention to it last week, but Monday I did not get no entry. I was waiting for a better signal because this is really a long-term trade. So I was waiting for something like a pin bar or just a small engulfing over here, but got all this move. Okay, so I did get an entry. I'll be watching it still. I'm still long-term long on this one. Yes, I won't get that entry like I'd gotten down here, but I'll be paying attention to whether I'll get another entry during the week. But long-term, this one I'm very bullish. Same thing on US oil. Okay, So US oil moves in tandem with UK oil. Most of the time, if not all the time. Okay, so this same thing I'm also watching, looking at this long-term trend to the upside. You can see same thing, market also respected this sort of flag formation, got some support around this level with the previous support. I had marked it. Let me just return it. I don't know why I removed it. So here you go. So just like the UK oil, same thing that happened over there. You can see that beautiful support. Market got this strong engulfing candle, which engulfed 2 days worth of action price on Monday, and Tuesday followed the same thing. So I'll be watching this one's not yet got an entry. This is really long term because, like UK oil, which is Brent, I'm targeting areas of about $88 mark. Currently, we're at the $70 mark, so that's about 1,800 pips from where we are. So I'll be paying attention to that. US oil as well. Okay, so US oil are targeting areas around the $83 mark, around this region up here, which is about 1,300, about 1,600 pips from where we are. So that's on oil. If I go to Aussie dollar, I got an analysis which I got to see it quite late. Okay, remember last week I journaled my trade that I bought on Aussie dollar. It was quite a very silly trade. Okay, I'll be honest, that was a silly trade I'd taken. It didn't even make sense. Looking at my journaling and my trading plan on how I approached that thing, this market, I had done a very horrible mistake. So this week when I was analyzing the market, I came and saw this sort of a pattern forming, okay, to the lower side, just forming. Market moves in sort of cycles. So if you follow those cycles, you can see this one basically moved in 3 cycles. You can see this impulse, a correction, impulse, a correction, and an impulse. And what do you expect from that? Some correction to come in. So yes, in this also expect market to sort of correct in an ABC manner, at least back to this resistance level. Okay, so we've had the first 2 days of the week as an impulse. I'll watch how the week will continue, but I'll be expecting market to at least come back to this level. Okay, so if you zoom it out, what level is this? Previous resistance acted as previous support, and now it is acting as a previous resistance. We rejected it already, and I believe market can push back up to that level. So I'm quite bullish on Australian dollar 4-hour chart. 4-hour chart. If you got a good entry, this was actually the entry to get. You can see this pretty good pattern. Look at that first rejection, second, and the third rejection on this one. This is the trade I taken last week. While I won't hide it, so I like to keep my risk rewards for the year just to stay and see how I performed on those trades. This is the one I took, and look at that entry. Market didn't even go a bit to my side, went straight to stop loss. Luckily I had good risk management, just 1% risk on that one, straight into loss. Okay, but this was a bad trade. This was a really bad trade. Okay, for example, you see like this add-on I had over here. This was some time back. I think this was and I've talked about it. This was in July. This was a good trade which turned into a loss. Why was it a loss? Because this was interest rates that came out and affected my trade and went straight into the target. However, this one is not a good trade gone bad. This was a bad trade, totally gone bad. Okay, so such a trade, you want to learn how to avoid such trades. Okay, so this is what I'm looking at. Let's see if market can push back up to this level, this previous resistance around here where I was targeting before. If you get any break of that one long term, maybe to upper side, but I won't bet on anything past this for now. This can be a good trade over here, targeting the 0.7410 level. Okay, so that's what I'm watching on this one. Remember, I've talked about ABC corrections. I'll be watching this impulse. If we get any correction on this one before we push back up, is what I'll be watching and see if I'll get a good entry. With that said, USDCAD, something on the watch list. This one has fallen off the roof. Crazy. It's been moving. Remember, USDCAD is a commodity pair, moves inversely with oil. So the direction oil moves, this one moves opposite. So as we've seen oil moving up, this one has been moving down. Basically, the Canadian dollar gaining against the US dollar. look at that crazy drop. We've not seen any correction ever since that drop started. Market has been in a crazy bearish momentum, okay? And that's what has happened. So this is the loss I had last week. I was looking for a certain rejection over here. Same thing that I was looking at on these other trades, okay? And it's on that. I was looking at this support, this resistance level. Where does it start? So you see this resistance level over here. I talked about this last week. This massive resistance level. I remember I took this trade last week on Wednesday, or was it Wednesday or Tuesday? Massive resistance over here, and I was expecting market, especially after this crazy drop and impulse, a correction in the form of this sort of flag. So if you look at this first touch, second touch, third touch. I was expecting market to continue moving further down. Same thing like what happened. This was a good trade though. I can't say this was a bad trade like the Aussie dollar. This was a good trade, just turned into a loss, and this was a market went into new highs all the way to this level, and then market started dropping. So also this one, I haven't gotten any other trade. I'm still sitting on cash and just watching what is happening. So this week, I'm still watching. I really don't know what will happen next with this one. Still trying to figure out the patterns that are forming, but I don't have anything much on that one. Moving on to gold. What do we have on gold? Still gold moving to the higher side beginning of the week. So this was a good trade. This was a good flag trade, okay? So just a basic impulse, a beautiful correction. Market sort of sideways movement, went straight into target, and we got that target. This was a good risk reward of 1:3, and market went all that, went up to that level. We topped at around the 18.10, 18.9 level. If you zoom it out, you can get to see that this is a trend line. So you could expect some resistance over here. So you see this, look at that, first touch, second touch, sort of a third touch over here, fourth touch. So of course we expect some correction before anything happens. So also on this one, I'm still sitting tight in cash. This was a better trade back then. Over here, I have no pattern that is forming. Remember, I mainly trade patterns, and that's what I'm looking at. So that is gold for me. The Dow Jones, we had a quick correction. Quick. Let's go to the daily chart. Market had a quick correction after falling last week. Last week we had some correction over here. This week we've basically seen more bullish trend. Nothing much, nothing crazy. Okay, so just Monday we had some bullish trend. Yesterday we didn't move much, and today we are yet to see how market is yet to perform. But Dow Jones, if you look at Nasdaq, S&P 500, chart pairs are moving into crazy new highs. Look at the US 100, which is Nasdaq. Market has been moving into new highs, which is an index, okay, just like Dow Jones. But this one mainly looks at the technology companies, which have been gaining crazily. This past year, they've been performing quite well. So we expect Nasdaq as well to be performing well, and that is exactly what has been happening. You can see this beautiful run that market is at, currently at all-time highs at $15,380 mark. So this is quite a good run. If you look at the S&P 500, also sort of dangling around all-time highs, okay? So US stocks performing well, market are moving quite fine, and US30, I expect it also to follow suit. You can follow suit soon, and you can start seeing market going into new highs. So that's what I have on Dow Jones. And yeah, I don't have anything much apart from that. I've covered most of the pairs I'm looking at. Currencies, remember, most of these currencies, I don't trade them. I just look at them, maybe analyze, see patterns, do some back testing using my strategy to see if it actually works on them and whether I should bring them into my watch list. But really much, I don't trade them. I really don't. So if you have any questions on these other ones, I won't lie to you. I have no clue. If you look at cryptos, maybe Bitcoin, remember these ones, I have active investments in them. I don't trade them as much, but I still enjoy analyzing them like what you're seeing on the screen. This is basically Bitcoin, which was supported by this strong support, which was in line with 61.8. Market was unable to break it. Using my sort of Elliott wave count, it's quite good, quite respecting that. I don't use it that much, but I use it sometimes depending on what I'm looking at. So I still expect this one on a bullish momentum. I expect new highs to follow suit. Ethereum as well, we have some investments there. XRP, we have some investments, and ICP as well. I'm also watching Filecoin. I'm sure most of you are not familiar with this one, so I won't really waste time on these coins. But yeah, that's what I'm watching. But anyway, that's mainly what I have this week for you guys. So simple analysis. I never complicate my analysis. Different personalities. The way I think, the way I know my mind thinks, I'm not a fast processor, but I'm a deep processor. So that's why I'm not really much into short-term trades. Because if you're a short-term trader and you trade maybe daily or a scalper, you need to have good pattern recognition skills, which I believe I do have, but mine takes quite longer time to process. So that's why I normally have those long-term swing trades, and I like to keep it simple. Long time, I remember I used to complicate things a lot. I used to put so much analysis. Like I have Fibonacci, I have moving averages, there's a time I tried pivot points. So having all those things on the chart at the same time will really slow you down. You'll have decision fatigue. You won't be able to make a decision. So that's why I reduce them. So just answer a few questions that I'm seeing here. How do you choose pairs to trade on? Kind of stuck. I analyze a lot of pairs. I miss good moves, though I trade on very less money, looking to trade financial app. So Collins, to answer you, how do you choose trades? Because how do you choose pairs? Because you trade a lot. One thing you need to do, remember, when you're choosing trades, choose them statistically. So there's this problem I see people making, and I've seen many people come into the office and they make that. So you hear someone say, I traded gold last week, I blew an account, or I lost a lot of money, I'll never trade gold again. That is an emotional decision making. Your decision making should be more statistical, more rational. So another better approach you should do because mainly the problem wasn't gold removing you out of the market or blowing accounts. The problem there was lack of proper risk management. So how do I get to choose pairs? I do back testing on them, and then I end up choosing. So personally, I have 2 volatile pairs and I have 2 non-volatile pairs. So I have Dow Jones and gold, which are very volatile, and I have US oil and I have Aussie dollar and USDCAD, which are less volatile. So that was one way I was choosing the markets, just to balance the 2. Another thing I looked at, I do back testing on every one of them. So I have to do back testing on all of them and get to know if my strategy works. There's no need of having a pair and your strategy does not work. So far, I've seen my strategy working best on Dow Jones and gold. The currencies are still dangling a bit. Maybe with time you might see me doing away with them. I've not yet concluded on that, but the commodities, which is gold and oil and Dow Jones, are doing well with my strategy. So that's how I choose. Then another thing that I look at when I'm choosing pairs, I like to keep them few. So I just don't go choosing a lot of pairs. I like to keep them very, very few. Hope that answers you. Big Mike asking, why do you buy your coins? I buy my coins on Binance. So I use Binance to buy coins, and then after I buy them, I send them to the cold wallet. So I don't like leaving the coins on the Binance, because anything can happen online. Binance can get hacked, or someone can hack your account and steal your money or your coins. So what I normally do, I buy them and send them to a cold wallet, which you also buy. Do you specialize on a few pairs? Yes, I do, Collins. That's what I've answered. The less pairs you have, the deeper you can understand them. So yes, I do. I believe in intensity over extensity. The less you have, the more you can understand them. Martin asking, in your opinion, what is behind the bull run on US30 fundamentally? That is, Martin, I won't lie to you. Fundamentally, I'm not that strong. I'd be lying to you trying to give you answers on that. And looking at those, I have no really strong idea. I'm more based on technical analysis rather than fundamental. So I have no strong answer for you, Martin, and I hope that's fine. May I book a day with Financial Hub, Kiniti? Yes, we're always open to have guests coming. So just get to contact us, then we can book a day when we're free, when we're in the office. Because if you don't book in advance, you can find us. Maybe you're at the podcast, maybe you have meetings, or maybe you are not free. So best if you can book, just text us, and that can be fine. Yeah. So Martin asking about the bull run on US30. I have no idea. Maybe looking at it on the what I've said, like now the Nasdaq and all. If you look at stocks, I've been looking at stocks. Look at stocks like Apple. Look at Tesla. Such things have really been rising. So they have the technology companies, Facebook. There's been quite a bull run happening. Not really strong, but on average they've been gaining. So that's been affecting also the S&P 5. I mean the Nasdaq. That's why it's really rallying. But fundamentally, I have no idea. Maybe if you look at it fundamentally on overall, which started last year, the low interest rates, the stimulus money that was pumped to help the economy jumpstart back again. If you look at such stuff, you can understand. With inflation also rising, okay. So low interest rates, of course, what do you get from that? Some increased inflation, which will see goods becoming more expensive, which will also affect the price of the stocks and the indexes as well. So, but looking at the nitty-gritty, I have no idea. So just to finish off, true, like Martin, you're saying, those top companies that are gaining a lot might be the reason. I'll research more on that. Yeah. So yeah, research. The better you get, then we can share here information. Like I said, I don't know everything. I know what I know. That which I don't know, I try and seek it from people who know. So, but I'll also do some research, Martin, and look at trades and look at what's really causing the really big pump. But the thing about fundamental, it can be really biased. Different sources can tell you different things, which some don't even make sense. So why I stick to technical analysis is because the same chart I'm seeing, the same price action is the same price action Goldman Sachs, JP Morgan, those big players are seeing. It's the same thing. But fundamental, everyone has an opinion, and some of those opinions may be wrong. That's why these big companies invest a lot in research and development. If you have the money to do that, then you can get the true answers behind that. But for now, I won't lie to you, we're at a really much disadvantage in terms of information, not just the right information, but the correct information. So we are really behind. So that's one reason why I don't pay so much attention to fundamentals, because of the distorted information that is out there. So just to finish off, Kiniti is saying books have different chapters on trading indicators, and is one of them. There are a lot of indicators listed, and my question is, do I have to pay much attention on that chapter, especially if I do not? No. Okay, I understand your question. No, if you don't use it, don't pay so much attention. The good thing about understanding indicators is just get to know what they do. You might come to use them in future. Even right now, you might find with very less indicators, but I read about indicators and see which ones I can use later on, because you have to learn to adapt to the market. Right now, there's some indicators which may be lagging or maybe not working well, but in the next 2 years, they may be working perfectly. So read them, understand them, do not negate them just because you're not using them. Like if you come here, I'll teach you about moving averages, pivot points, will teach you stochastics, RSI, parabolic SAR. I know about all those things, and I have a reason why I don't use them. So understand them, and then you come to your own conclusion whether it works for your strategy or not. So I hope I've answered you, Kiniti. So yeah, so that's it from me, guys. I'll see you on Friday. We might unfortunately not have a session because we might be going to shoot the podcast on that day. So, but we'll see. We'll confirm to you guys. But yeah, so that's it from us, guys. I see the appreciate. God bless. You're welcome. Have a wonderful week, and I'll see you guys soon. Bless.